Good evening, traders. Adam here from Bull Logic doing the market analysis for you. Bit of a flat day in the market. S&P only up 0.01%. Nice little doji candle, did not go anywhere today. Did not really confirm the balance that we were looking for. Did not even get above that 200-day moving average. Small bounce in the middle of the day. Basically very choppy. Very low volume today because the bond market is closed. It is Veterans Day. A lot of people took off. So today was pretty much just a waste. The only thing today did was get us a little bit closer to getting out of that oversold condition. As you see, stochastics down here, down in the sevens. Anything under 20 is pretty much oversold. So anything in the low single digits is definitely oversold. Still looking for a sideways move here in the bulls. Tomorrow should be a little bit better indicator of what the bulls decide to do. Like I said, I'm pretty much writing today off just because of the low volume. There just wasn't many trades out there. It was a small inside day. I think we could still get a bounce here at least into the 1400 zone. We're right around here, 1400 to 1404. Take us nice back into this support, this resistance area, and then make it a lot easier for us to sell off and break below that 200-day moving average. Any break below that 200-day moving average right now would be an extended break, and it wouldn't hold. If we do break below the 200-day moving average, I would expect a violent snap back and a nice push higher from there. But we are still leaning very defensive here, especially with the sloping of the 50-day moving average coming down and the 20-day moving average. This shows us that the short-term and the intermediate trend is currently down. It's a good time to be defensive. It's a good time to look for shorts. But we do need a better place to get into our shorts. That's why we're looking for a sideways move or a bounce. A bounce would be a little bit more ideal. It'll help set up the charts a little bit better. They're already starting to become a little bit harder to find. So we definitely need a reset of these charts, and then that way we can actually start to short pretty heavy and see if we can't break down in that 200-day moving average. NASDAQ, as we talked about yesterday, we broke down the 200-day moving average last week. It is now just kind of piddling around. It is oversold. Small down day today. Would like to see a bear flag pull into that 200-day moving average. You know, a week of buying into that 200-day moving average with that sloping down of the 20-day moving average is going to bring in a strong resistance here at that 29.77 level. That's the point that we really want to get short tech. Not seeing many things that look exciting in tech. As you see, Amazon's been beaten down pretty well. Still under that 20-day moving average, trying to get to that 200-day moving average. We'll have to see if it does it. Apple not looking any better. As you can see, Apple's had a rough go at it. Nice little breakdown of this head and shoulders, retest of the head and shoulders, retest of that neckline, breakdown from there, bounce off that 200-day, broke that down, and now it's just trying to build itself back up, just trying to get a dead cat bounce out of itself. It is still oversold, so we might get a little bounce out of there, which will help the market. But in the long term right now, Apple is hurt, and it is one of the market leaders, so we'll have to keep our eyes on that. One interesting point today is the decline in volatility. This is the move we were looking for on Friday. For some reason, it happened today. VIX was down a little over 10% when the market went absolutely nowhere. Volatility came rushing out of the market. It was pretty much just straight down all day without really any bounces. Good sign to see if you're the bulls. You rather see the market get more complacent, and that'll allow us to not panic sell in the market itself. If the VIX spikes up high, then it'll be a little bit more panicky, a little bit more jumpy. Right now, people are not there yet, which is a good sign, as we might actually be able to move a little bit higher. Just going to flip through the sectors real quick. Home builders are sitting on that 50-day moving average. They are oversold. Volume on this sell has been pretty high, so it's going to make a bounce hard here, but I would expect at least a dead cat bounce. Energy coming up under that 200-day moving average. Utilities just been killed. Very oversold. Just needs a dead cat bounce there. Materials not looking good, sitting under that 200-day moving average. Again, it is oversold, much like everything else in this market. Technology, again, very ugly. Financials looking okay. Looks like we could get a bounce or a bear flag into that 50-day moving average. That would be nice as a good place to short financials. And the one shining star has been biotech, which is a surprise, surprise, but definitely producing some good charts, especially today. A lot of those biotechs were running. So, not really seeing much, but I'm not going to count today as really anything happening just because of the volume. We're going to see if the bulls can't get a continuation run, at least at least get us over this 1392 level and try to get us into that 1400 level for a nice bounce. Let's see if they can actually finally step up because they have been lacking in any kind of momentum and since we put in these highs. All right, everyone, good luck.